Welcome to the No BS Podcast, an unfiltered look into the global hospitality and short-term rental industry with a focus on founder stories, current events, and culture.
I'm Mateo Bradford Vasquez.
And I'm John Stokinger.
And this is our podcast. We bring the right people to the table at the right time, giving you an inside take on the hospitality industry like no other podcast can.
We appreciate your support. So let's make this official. Make sure to like, follow, and leave a review for the No BS Pod on your favorite podcast listening platforms.
And don't forget to check out our YouTube channel as well. While you're there, please like, listen, and subscribe. And oh yeah, make sure to hit the notification button to stay up to date on all of the exciting things that No BS Productions has coming up.
Good morning, Mateo. How are you?
Good morning, John. Fantastic, brother, as usual.
That's good. That's good. Tech Exec Series, episode 107. We have a great guest. We got lots of amazing things to talk about. It's been busy. This transition to doing this on our own and figuring all this out has been exciting. And for those that you don't know or didn't listen to last week's episode, Mateo and I founded No BS Productions. We are legit now, and we're doing this on our own. So we're excited. Long story short, we're excited, and we're changing some stuff up a little bit. But without further ado,
We got a great guest.
joining us today is John Sukhia. I hope I didn't murder that, even though he just told me a minute ago what it was. From TopKey, how are you, man?
Good, man. Thank you guys for having me. I'm really excited to be here.
We're excited for you to join us as well. TopKey has been in the news with a recent raise. So we definitely want to go ahead and talk about that. But I want to talk about when I first met you in Missouri at Spring Forum.
Yeah.
And I was fresh into 2 weeks or something like that at Direct. I hadn't been there that long, maybe a month or so. I had just come over. And then you guys I remember building your booth.
I don't know how you've become the guy that built the booth, but
No, I didn't build the booth. I remember you building.
I do remember you helping, assisting in various ways.
Task rabbit.
Yeah.
And it was, that's how we met though.
That's right.
You had yet to build your booth.
Right. We had a task rabbit that I hired to help me build this thing because I never built it before. And apparently the organization that sponsored the event required the task rabbits to have like insurance or they wanted you to pay $2,000 to have their guys do it. I was like, and this guy was like a complete pro and he showed up and he had 3 insurance levels. And I was like, you're amazing, man. Cause I was going to be paying like $2,000 out of pocket to have the labor, or I would have had to do it. But yeah, it was funny.
Verma doesn't mess around. Any of those organizations don't mess around either, because even like I had to go rent a circular table because ours didn't come together and it was like $600 or something ridiculous.
Oh, it's unreal. Yeah. You're just hemorrhaging money when you go to those things if you're not careful.
But 80 though, like I feel like they take advantage of you being in peril, right? Like, you really want this table? $600. How bad?
You need that
really
weight basket?
Like, right? Like, you need a power strip?
Yeah, we can get you in a really good Wi-Fi situation, about $300 a day. But
Right.
It's like,
So that's where we met. It was an interesting show because there was nobody there. But because of that, I get to know you and your team and learn a little bit about TopKey. And it's been exciting to see you start popping up and showing up in the news. And hey, now you just raised 5.2 mil. So who's this TopKey? This is one of those startup stories that out of nowhere, and we know better that you've been working your ass off for years behind the scenes.
We got to start at the beginning, man, because he's got an amazing like hospitality journey that actually speaks to my heart. Finance background, enters hospitality. One of the things we really do here is we want to get the full view of who you are, right? And in this space, and like, where'd you grow up? How'd you get here? You didn't just wake up one day and say, you know what, I'm going to be in the short-term rental business, and I'm going to bring my finance experience and make the lives of property managers easier through technology. Tell us your story. How'd you get here and how'd you get into hospitality?
yeah, no, guys, it's a broad question. So I'll try to make it as succinct as possible. My background started I'm from Florida, from Tallahassee, Florida originally. I went to Florida State for undergrad, and then I was an accounting major in undergrad and ended up shortly after graduating, basically a bunch of my own work to get into grad school. And I had a couple buddies from college who had gone to do some really interesting things in finance. And I knew I was inclined toward that arena, but I didn't know how to make that shift from accounting to doing something a little bit more intense in finance. I ended up taking like 6 months. I studied basically every night for the GMAT. And I ended up going to Duke for business school. And then at Duke, I did like an unpaid internship, went to New York, and then I ended up getting an investment banking role. I did like a 1-year master's program at Fuqua, which was designed for folks coming from undergrad versus a full 2-year MBA, but effectively the same exact coursework. And it's called a Master of Management. So it was a very like natural place for me because I had a business undergrad degree, but it was like really gave me a different perspective on the world being such a great institution and all that.
Right.
So I ended up getting a job at Wells Fargo Securities on the investment banking desk. And I was in between Charlotte and New York for about 2 years, Charlotte, where Wells Fargo Securities is based. Right. Classic investment banking, 60 to 80 hours a week, just grinding for 2 years. Just a really great place to develop a strong analytical skill set and also just a professional, I think like kind of base of skills that just serve you well wherever you end up. And after 2 years, I was covering industrials. So I was covering like paper packaging, forest products, timber REITs. A guy I worked with on the desk at Wells had left to join Starwood Hotels up in New York. And I had wanted to go to New York. I'd lived there for a few months, and New York's a great city to be when you're young and single. And I was like, I want to go back to New York. So my buddy got me an interview, and ultimately I was able to secure a role in the corp dev team at Starwood. And it was a really interesting position because that team basically helped Starwood at the time buy and sell assets. So the Starwood, there's two kind of Starwoods that are well known in our industry. There's Starwood Hotels, and then there's Starwood Capital Group, which both were founded by Barry Sternlicht. And I was at Starwood Hotels, so the M&A team there. And I was just really fortunate to be there at a very good time because we were active. I was focused on like doing a lot of their capital markets work. So building their commercial paper program and bond. They had some like specific bond deals that I worked on, but then separately really digging in on the hospitality space because we were at the time selling our timeshare business, which was Anna. And then it ultimately got sold to a company called Interval Leisure. So at Starwood, and I was just the junior and then mid-level director on that team that managed that process. So worked with a lot of the folks on that team. Fast forwarding, separately worked on Starwood and Marriott, ended up merging, worked on that as well, and just being in that team. And so it was just really fortunate to see at the time one of the largest acquisitions in hotel, I think still maybe the largest in the hospitality space, Starwood getting bought by Marriott. Fast forwarding, I ended up having the opportunity just to take a step back and either join Marriott or decided to do something different. And so I left to go to California and I moved to a company called Hotel Tonight. I took a role in partnership, so a very different position, but I knew that was something I was really interested in.
Hotels Tonight, was that pre being acquired by Airbnb?
Yeah, pre being acquired by Airbnb. So this was 2017 when I joined and ended up managing a team of folks who oversaw the supply on the hotel management company side. So worked with a lot of the leading hotel management companies. Hotel Tonight, last minute booking engine, ended up expanding to a full suite of booking calendar. And we were mostly focused on like inventory in mainly Western Europe and bigger cities in the US. So Miami, LA, San Francisco, New York, of course. So managed a team across several different markets in that area. We got acquired by Airbnb, which was an awesome experience to go through. It was deja vu going through another acquisition. Yeah, it was again, I've just always felt like been blessed to be in good positions and worked with awesome people. But anyway, when I joined Airbnb, the acquisition as part of that transition was mostly around Airbnb bought Hotel Tonight for a couple of reasons. One of which was to build out the hotel's inventories platform on Airbnb. I ended up just had a couple really cool roles there, did a lot of interesting things in addition to just managing that team. But effectively middle manager at Airbnb, I was looking at the future there. A lot of my time there was like, man, I want to start something. I'm excited about entrepreneurship and spent the better part of, call it a year, just thinking about ideas. I had a friend who was an engineer at Airbnb who I was talking to pretty regularly. And fast forward, we decided to leave to start TopKey. And initially we were building something very different. We started a marketplace to connect property managers and homeowners. And so that was the initial big idea that we had. I left Airbnb in the fall of 2020 to start that. And then suffice it to say, basically, we went through and got into Combinator, which is a startup accelerator based in Silicon Valley that had previously backed like Airbnb, Stripe, Instacart, a bunch of great startups. And then over the summer of that year, 2021 now, just decided that we really didn't see the viability of that type of business as a venture-backed company. And we hadn't raised a lot of money. So it was a really good spot to be in, frankly, as an entrepreneur, because we had just raised a tiny little amount of money. I could pay myself a bit of a salary, but I didn't have the obligations or the pressure to go out and scale something that wasn't going to work, which is a real challenge if you get into that position. And that sparked the journey. Yeah.
They're excited to get behind something that's actually going to go ahead and make them money, dude, not just.
Yeah.
before you go too far down that path.
I mean, that's what rented was. Pre-rented, Vacation Rental Futures did that. And it's interesting.
Yep.
Like, I don't know if you came across that model.
I did. I talked to a couple of them, Michael Goldman. I talked to Andrew. I talked to a few others on their team just to get like insights around it. We dug in pretty deep. I know we were talking before we started recording, but at the time I was living in San Francisco, decided to in 2020 during COVID basically moved. We bought a car and we lived in different vacation rental towns before I left Airbnb, and then we were living in like Boise and Bozeman and Austin, Texas. We just like figured, hey, when else can we do this? My wife was a consultant. I had a lot of bandwidth to do stuff remote, Airbnb, of course. Ended up buying a house down in Santa Rosa Beach, so in 30A. And we just thought, what better market? One of the highest concentrated markets of vacation rental managers. And we were fully remote at Y Combinator. In that time, that was a good place for me to really just focus on this without a lot of distractions. There was no startup parties or anything of that nature. There was no talking to VCs. It was just, I'm in a vacation rental market, meeting really cool people, building some amazing companies that in my world, people have not a lot of context for like that. Right. The tech world doesn't really spend a lot of time with that cohort. And obviously we do, and all of us do, but it's a bit still underserved, I would argue. So
in that time, John, too, that time is interesting because being in Florida, you could actually still go and meet with people and talk with people and see things happening. But if you're in other states, you're locked out.
Yeah, it was a very different world flying back to SF. I think we sublet our apartment and then sold it in the summer of 2021. Gave up our lease finally, and we went back for a month, and it was just like a different world.
You're in Florida, you've gone ahead and you're not in there. Now, sticking with the timeline, you're in Santa Rosa Beach, you're in a vacation destination mecca. You go east, you're PCB, there's like everything there. You go west, you're Destin, you're Fort Walton Beach, you're partying at the Floribama.
Oh yeah.
You're in the middle of it.
That's not really the 30A vibe, John. That's a little west. That's a little west.
That great beer pub there. That's pretty fantastic.
Yeah, we lived right around the corner from there, or a little bit down the street. But yeah, it's become like I grew up going there as a kid, right? And it was just Destin, sleepy town. There was still people that would go there, but now it's no way. Like you were down there right not long ago, John. It's like just
Mateos, we're just there.
Oh, you guys, it's exploded down there. And I love that area. I have a ton of friends down there, and it's just such a great place. It's like still to me, it's still a lot less developed, of course, than like South Florida or anything.
Oh, for
that area. So you still have a lot more room to.
And you see the development over the past 10 years, right? Like it's developed a lot.
Yeah.
Here, I'm in Atlanta. So many people still don't know about 30A. So we're like, shh.
Yeah. There were way more Chicago, but I noticed when we were there, it was like
snowbirds,
Midwest folks, Canada. Growing up, it was like, all right, you're in Birmingham, Atlanta, maybe New Orleans. Like now it's just the floodgates have opened. Hey, like it's great for that area in many respects, but yeah.
Now you've moved to Nashville.
Yeah, we recently decided to move to Nashville. And the reason was not for anything negative about that area. We decided as a company, we wanted to be in person. And so had spent a lot of time thinking about where we wanted to be. And then just personally, my wife, she's from Sweden. So we go there. She goes there a lot in particular. And we were struggling to be at a place where we had to take 3 flights to get to Sweden. And so anyway, we had both had family up in Nashville that were from that part of the country. And we'd spent a bunch of time here and just really liked it and thought it'd be a great place to recruit really good tech talent. So that's how we ended up here. We moved here about a month and a half ago. So we're still pretty new.
When it comes to dynamic pricing, Price Labs is a name that keeps coming up in conversations with revenue managers, property managers, and hosts.
Price Labs lets you customize your pricing strategies and run your business just the way you want, helping you maximize revenues, save time, control pricing, and generate reports.
That and the fact that it integrates with over 90 plus property management software systems. And with the ability to make direct API integrations, that makes it a no-brainer for me.
Price Labs knows that each one of your properties is unique, and that's why its smart calculations take into account the performance of your rentals, occupancy rates in your market, and even your preferences like minimum pricing and length of stay.
Head over to hello.pricelabs.co/the No BS podcast to snag a free 30-day trial and get a free market dashboard too. Link in the show notes. Use the code the No BS podcast to get your free trial and $10 off your first bill.
I think you have an interesting perspective, and I want to hear how we get to TopKey, and
Sure.
especially with your experience, where you were going, where you ended up. You grew up in vacation rental towns, like you said. You grew up in Destin, so you have a dual perspective of where the industry was and now how the industry is transforming right now at the tech level and maturing through a next generation of people coming into this industry that are tech enabled, that are a different type of traveler with a different type of viewpoint and worldview. So how did your experience turn into TopKey and like where you are today?
The thing for me at least, is just seeing our industry. Growing up seems so cliche because it's a very established sector of our economy in some respects. But then you have so many newer folks and so many newer, both on the demand and the supply side, getting into the market, right? Of course, on the demand side, Airbnb was at the forefront of this and just bringing in a sector to the zeitgeist in a way that there's just been just a huge influx, of course, as you guys are aware. But then separately, what I've seen is there's been a real shift in terms of the type of folks who are entering the market. We've seen it at TopKey. We've also seen it just certainly getting to know the sector. I was seeing it at Airbnb, where we worked with a lot of these companies, and I was relatively joining from Hotel Tonight. We were just jumping into a company that was already way farther along. It was like walking into a roaring river. This thing was going on, and you could see that there was no stopping it. But from a tech perspective, what's been really interesting is that I think there's a lot of folks who recognize the power and then recognize all of the tools that are out there to basically streamline your operations and do things more efficiently. And I think tech, admittedly, can get a bad rap for certain aspects of, how people perceive technology. Of course, the leverage that some tech companies can exert on smaller vendors. But as a strategic operator, I think the thing that I find really exciting, and I also see this with a lot of our customers, is there's a whole host of people that recognize where they should offload work, that they recognize they're not going to do the best, and then where they should try to take on more work that's to the best and highest use of their skill. And it's really hard to build a vacation rental management company, build a hotel, build any sort of hospitality furnished apartment company, and then also try to manage and manually oversee all of the aspects of your booking strategy, channel management, your financial operations. So those things just become almost zero sum. Like you can only do so much so well, in my opinion. So that's to me the thing that really struck me about the last, I call it year and a half, building this version of our business.
The interesting thing, John, is that these property managers, whatever size they are, and the size that you're going after, a little more established, a little bit larger, a little more in structure and how they're built, but you're still you're only pro at what you're a pro at. And then there's certain tech and there's certain things that you have to outsource. And whatever those things are. For what you guys do is you come in and you help with the finances and you help with expenses. Let's go ahead and why don't you give us your 30-second elevator pitch for those that are listening that what the fuck is TopKey? Right? They've been listening for 20 minutes now or whatever, and they still don't know what TopKey is. Why don't you go ahead and let our audience know what TopKey is, and then we can go ahead and talk a little bit more.
Sure. So we are building a financial operating platform for vacation rental operators and hotels. So what we do is we offer property managers the ability to create both FDIC insured checking accounts as well as secondary trust accounts that they can create for owners. We have Visa issued credit cards that we issue to our customers for them to basically use in the field as well as online, that allow them via text integrations to track every transaction back to individual units to ultimately close their books faster. And then we have built a number of direct accounting and PMS integrations, and we're in the midst of building our PMS integrations to help streamline that flow of information and ultimately to save mainly bookkeepers, owners, and financial operators time during the monthly close process, which is arguably one of the most cumbersome and challenging aspects of the day-to-day ops that folks are constantly flagging. So yeah, that's in a nutshell what we do. And we have a lot of other things that are in the pipeline on the product already, but that's a synopsis.
So I love this. So let's dive a little bit deeper into that.
Yeah.
So you issue Visa credit cards that can go, or their debit cards, I'm sorry.
The credit cards.
They're credit cards but any sort of transaction that happens on the card, then those cards are tied to units or are they tied to individuals? So this is my question. I am Joe, somebody. I work on the hospitality team,
Maintenance guy at a vacation rental company.
and I get a credit card. So
Yeah.
I can go ahead and take care of the expense and I go down to the local store. I get whatever I need to put it on here. And those expenses are then tied to where?
Yeah. Company signs up for TopKey. We allow the owners of the business, whoever is an admin on the team, to issue cards, both physical and virtual, to their team. So you can create unlimited virtual cards and individual employee cards, just the same way you would create with an Amex or Capital One or what have you. Those cards in the field at authorization, Joe, the maintenance guy at Beach Sun and Fun in the Sun Management Company in Amelia Beach, Georgia, I'm just making it up. The company, let's say on average, is managing 70 units. On average, they're going to be spending anywhere between $70,000 and $100,000 a month on transactions that are going back to those units. And
Right.
Meaning those transactions need to be reimbursed by those owners typically. And every company has different structures. Some companies manage inventory that they own. Some companies manage inventory that is owned via an investment entity. But generally, everyone is faced with the same challenge, which is I need to allocate all these transactions back to those properties and do that every month in order to close my books and make sure that I can get clean reporting on those units. So what the team is basically doing is in the field, what we've built is a tool that whenever a card is swiped, we send a text directly to that cardholder. So Joe, the maintenance person in this case, gets a link to a web form that he can open up on his phone anywhere, any Google, Android, iOS, and he can select and upload a receipt and upload a memo. And then we have all the properties preloaded.
Oh, nice. So you can just go ahead and tag it to the property.
Easily tag it to a property. And then we also have these categories that we've predefined. So effectively what they're doing is it's build to owner, build to guest, build to corporate, or assign to inventory. And you can think of that as like the action that needs to be taken on that transaction for the bookkeeper or for whoever is like dealing with the close of the books.
It's like QuickBooks tied directly to that credit card, which in turn plugs it right into
You got it. Yeah. You basically do that. It takes 2 seconds to do this. We also then have direct integrations to the major accounting software. So for instance, with QuickBooks, if you're using Class, for instance, to code your properties in QuickBooks, we have the ability for you to map one-to-one to the Class category, and then we'll push that transaction over. And we have auto rules to set to assign the general ledger category in QuickBooks. So for instance, expenses, maybe it's maintenance expenses, we can auto assign that. And then the transactions are staged. The bookkeeper can go in, they can filter down to very specific, they can filter for, let me see all the transactions from the last month that are signed to a property, but don't have a receipt. This is the type of thing that bookkeepers are thinking about every day. I have 18 transactions. Now, what do they do today? And again, it's what they do today is they have a spreadsheet. Maybe it's a Google spreadsheet. Maybe it's some sort of like hack together Expensify, or maybe they're using Divvy or something like this. Then they're going and like texting someone on their team and going, hey, can you send me the maintenance person who's probably got a million things on his plate? Can you send me a receipt from 3 weeks ago? Do you remember what property was this for? It's just a messy kind of manual process. And then they're going in and manually inputting this stuff into either books or often in QuickBooks and then separately in their PMS if they're producing owner statements out of PMS. That's the last piece of the equation. Certain managers do it in the PMS. Others are doing it manually. So there's just a really cumbersome process that
It's messy.
it's just messy. And then you lose money if you're not careful. And certainly what we've seen is a lot of managers are just leaking money because not every transaction, as everyone knows who runs a business, are you sure that every dollar that you're making on behalf of your owners, this isn't, for instance, with TopKey, we have a team, we have expenses. We don't have to get reimbursed for every dollar that we spend. I need to make sure that the dollars are accounted and assigned to the right general ledger account. But for managers, our industry doesn't run at like software margins. So these are real costs that like at the bottom line can become a real drain on the business if you're not careful. So that's the initial product. And then we have a really cool bill pay product that we've just released to basically allow you to pay vendors. We use AI to populate invoice line items, assign them to properties. And effectively, in the same way you can track a credit card purchase, you can track a bill pay purchase back to a property, sync it to the accounting software. So we have the ability to basically pay all kind of transactions out of the platform. And then these kind of very thoughtful ways to connect that information to the right systems that you need. So the mouthful.
You and I talk all the time about direct software, but we don't dive into it too much here in the show. What can we tell our listeners?
Let's start with the fact that Direct was built specifically to meet the needs of its own management company. Fast forward a few years, updates and features are executed and released by a team that cares about user experience for hosts, property management teams, and guests.
So, built by users for users. How does that make Direct a solid PMS?
Direct is special. It is built on a modern framework and it's intuitive. What I mean by that is that it's clean, easy to navigate, and everything you're looking for as an operator is where it should be. Have you seen or used some of that other software? A lot of them are a mess. Features and options are just crammed everywhere.
That all sounds good, but does it work for everyone?
Absolutely. Direct seamlessly integrates operations, connectivity, accounting, and engagement tools all in one place. It's built for scale whether you manage 5 or 5,000 units. Direct also eliminates redundant manual processes and leverages advanced reporting and payment processing features to make data-driven decisions, maximizing revenue potential.
As their director of sales, what's your main focus right now?
I just want Direct to be part of the conversation. Deciding which property management software to use and changing from one solution to another isn't easy. I encourage everyone shopping for a better solution to demo a few options and see what is best for you now and for your growth. That's the goal. If you're a host or property manager that is unhappy, we should talk.
To learn more about Direct and to get $500 towards implementation costs, go to info.directsoftware.com/NoBS and book a demo with John. Make Direct part of the conversation.
It's necessary. It's one way to get to the end result that everyone's trying to look for. You're either going to use your product, which sounds fantastic, or you're going to go through it the way you're doing it in hopes that most are doing it probably today is through their PMS and hoping that they have a solid solution that is in place. Yeah. And it's you hit the nail on the head with the margins thing. The margins are so tight and they're getting tighter and tighter as days go on. So to be able to allocate every one of these expenses correctly and get reimbursed for them the way they should be and not be losing a little bit pennies on the dollar is in tech margins isn't necessarily the same as is for PMS. So it makes a ton of sense.
And it matters to the smaller companies, right? Like you said, that impact is real and they can't afford to just let those things slip through the cracks. It's interesting though, when you see the adoption of this, do you find that you're still having to convince people the value of these types of, because in our industry, and I think we've talked about it a little bit, this changing of the mindset, this kind of new approach to where you came from a tech optional background to a tech essential and a tech enabled.
Yeah.
Necessary, right? These are the things that are the differentiators that could keep people in business versus not. Understanding that, are you seeing that in the adoption of what you're doing and in the adoption of your product? Or are you still getting a lot of resistance from people who are a little or understand?
We took a genuinely thoughtful approach to beta testing this for a better part of a year. I think in a lot of respects, financial products in general just require a lot higher bar to release versus just even a SaaS products in general, just because of the nature of the compliance. We're partnering with an FDIC insured bank. We have Visa has their own massive initiation process that you got to go through just to get approved and all this. So we spent about a year building the product. I spent a large part of that period basically going and signing up companies that I got connected with mostly through my network, people in the industry, and really vetting companies almost as much as they were vetting us. Cause I was I want to make sure I'm working with really thoughtful, sharp managers who also recognize we're in a beta and I want to be able to work with them. You need that because at the end of the day, I'm not day-to-day managing a vacation rental company. Our customers are. And so having that for a good while was really valuable because it gave us a ton of really unique insights about other problems and pain points. B, it really allowed us to work out kinks in the product. And C, I would argue we're still not through that in some respects. We still have beta folks that are testing aspects of the product. We released our second version of our bill pay product. We're still getting feedback on it. We're building PMS integrations. You always want to have folks who are willing to test those things out before you are releasing those to the wild. But that process has been really valuable. And it's really given, I think, our team a lot more credibility to have those conversations because we can speak from experience versus kind of theoretics, which I think going through Y Combinator, if you really go back to what they drill down with founders is build product and talk to customers. And you'd be shocked that, or at least I was shocked at how many founders that I got to know who have just flagged, hey, it's way harder to do that in the moment. And for myself as well, it's always better. It's always more fun to talk to your friends or try to build something cool that you think, but pick up the phone, call a customer, call someone, go, I need your input, and just be like, listen, I'm trying to get feedback. Will you be willing to share it with me? Would you be willing to test this? And so we're getting to
This is your advisory board. Like these are essentially helping you with your roadmap. They're helping you make these decisions. This is working. This isn't working. Oh, why didn't we think of this? And it's invaluable.
Yeah.
And these beta users that you got the balls to go talk to and figure out, work with, they're the reason, and you're smart and your team's smart. So they're not the only reason, but having that relationship with them is the reason that you've been able to go ahead and you just raised $5.2 million, which I want to make sure that we talk about, like how relatively quickly come to the table with some money to do something pretty substantial here.
Yeah. I mean, we're super grateful for our investors. It's like really awesome. I think folks we've got around the table. Felicis led the round. They were the initial investors in Shopify and Canva and a bunch of like other startups. And then Andreessen Horowitz led our pre-seed about a year ago and then as well participated in this round. What we've seen is that this raise doesn't change like much in terms of like our approach. It's just, I can basically roadmap more products and like we can go out. But the one thing about the venture capital landscape, which I think a lot of people are learning, and I'm certainly learning as well, is like the capital raises that happened in the past are going the way of the dodo bird. Like you're not going to have huge rounds. And the kind of idea back in even 2021 was like, hey, you raise a round and then just show a little bit of inkling of revenue growth. And assuming you have some positive momentum, you can probably raise another round. It's a very different landscape. So we've not gone and hired a bunch of people and we're not like ramping up huge team to build the market. We're thinking about this and the way you think about it is, hey, if this was the last money I ever raised, what would we do with this money and how would we be responsible? It's still like a learning process. But Tay, I want to go back to one of your questions you had asked about with respect to how do you think about pushback or like maybe are there concerns? What we've seen as we talk to a lot of managers is, there's certainly a cohort of people that are like, I'm not ready to make this shift yet because this seems like a lot of work. That's one thing we hear. And I think a lot of people are used to the kind of the major PMS transitions that occur and how much work goes into that. And so what we've tried to flag and what we've shown, I think we're doing more of this with like demos, and marketing is not my forte. That's the area that I've struggled with the most in terms of it's just not something that comes natively to me. I don't have those chops. And so we've tried to really show people, hey, it's 2 onboarding calls. It takes you 30 minutes. We send you cards. There's not a lot of complexity to this. It's like opening a bank account, and if you don't want to use the bank accounts, for instance, you can use the credit cards. We offer 1.5% cash back on every purchase. We're giving you basically a really competitive rate there that beats any mileage program. We can get you set up really quickly. So that's been one. And then the other, I would say, is there's a certain subset of the market that I do think is a little bit reticent just because they're cut from a different cloth. And it's, hey, I want to see this product. And it's just like adoption curves. You can start to tell. But what's been cool is we're starting to see folks, and even in that category, I would classify them as starting to say, wait a minute, we can do this, we can test this. And that's exciting to me because it shows me that there's all you're thinking about as a founder is like, do we have product market fit? That's really the name of the game. And until this is proven out, it's not like this business, I can't say that until we've proven that thesis out through adoption. And so we're starting to get to the point where I'm feeling confident saying that we have certainly a really good line of sight into that with the existing products. And we haven't had any companies churn since we launched. We've never had we just continue to like grow the number of companies and also grow the user base in terms of activity. So like folks, the adoption curve for something like TopKey is like initially maybe they put a little bit of spend on their cards and then they go, wait a minute, let me really start like ramping that up. As I see this is working, my team's saving time. I got a text the other day from a manager saying, hey, we caught like $3,000 last week in expenses that we would have just completely missed. And this is a big company. They had 150 plus units. And so he said, yeah, every day they're onboarding new employees pretty regularly. And there's just stuff that gets dropped in the shuffle. So anyway, all that said, I think we're seeing more and more adoption, but pushback remains. It's just something you're constantly thinking through and how do you mitigate those questions and stuff.
But I think you hit the nail on the head by picking up the phone and not doing what you think is good for managers, but listening and doing a listening tour. You're 100% the beneficiary of anything that you get from that feedback. And it's something that I'm sure that you're going to want to do, but seeing your idea and your leadership kind of style, I see that going. It's interesting though, like I'm a partnership guy. So to me, it seems like these are a lot of partnerships and it seems like that's a lot of the way that you operate too.
Yeah.
Talk to me a bit about like how that's defined your vision for the culture of the business and as you're growing. Are there more partnerships that you have to offer? And like when I'm
Yeah.
looking at the model, I see a kind of limitless platform for what you're doing around that space.
Yeah. I look at it from the concept of partnering with our customers. And obviously there's like that word gets used a lot, I think a little bit with respect to customers. It's, are you really partnering with them? So I think we're trying to truly do that and just show that, hey, we want to learn from you. And also if you like the product, you're going to use it and we're going to learn a lot more from that process. So just being very like open to that design partner concept and having folks on the board that are not just design partners, like for the whole platform, but it's like, hey, will you be a design partner for this integration? Or would you be a design partner for this specific feature? And I really will like press upon you. The only thing I'm going to ask is I'm going to do a call with you. We've done maybe 7 or 8 now companies that we do like a standing either weekly or biweekly call with typically their bookkeeper or their accounting person. And it's really intended to be a open-ended forum to just talk about what are your issues, what's going on, any flags on the product that we can fix or things that maybe you want to improve. So a lot of our insights, for instance, we had a company say to us, hey, I'm going back and forth with managers with my team on pulling receipts down. So we built a little function where you can open a transaction, you can hit a button and it'll send a text for that specific transaction. And it's just like a little thing, but it makes such a difference. They don't want to be the guy that has to go back and like bug their owner or bug their maintenance person or whomever. And then so that's one piece. And then the other piece to your question is just on like other companies. And what I've seen is we have a lot of interesting inroads there because of our card product. And I can't count how many people have reached out about, hey, we should do a partnership where we'll give you companies like 2% cash back. We all do discounts and we're all in each other's marketplaces, right? Like, why not make the discount just a cash back component? And if we just something like that. So there's unique things there. And then I've spent a ton of time with a lot of other founders that I've gotten to know in our sector. And I found this area of our business to be very generous. People are really willing to open up and help. If there's any lessons for this podcast, as much as I could think of, it's just ask people to help and be generous to like turn it around and give it back. But like people really do go out of their way. It's amazing how many people have come out of their way to make an intro or make a call that I wouldn't have expected them to. So that's to me been the coolest part about this. And I know that sounds hokey, but it honestly is to me, that's just,
it's our space. It really is.
Yeah.
This is not finance. You would not see this on Wall Street. Like you would not see this at banks. Like no, it's very different, but it's very honest and authentic. One of the things I love about the space, honestly, 100%.
Yeah, for sure.
We've come close to the end here, but what's new for TopKey and what's new for you? Where are you going and what's on the horizon?
The biggest focus for us right now is just continuing to refine the existing product. So building out more integrations, building out a lot more functionality for folks who are using the card product. We have some really interesting things around project-based spending. We built a feature to allow you to attach a card to a property. So not required here. So the idea is not create 150 cards if you have 150.
Right.
But if you're doing onboarding, which a lot of companies that are signing up to us are, they're growing, they're scaling. You hit these inflection points where you need more support and the systems that you're using break. And so what we've done is you can very easily create a card, have it attached to a property. And then the follow-up to this is like actually be able to download an output that shows you all the spend. It's not tied to a specific date, but it's tied to a project. And that way you could send that to your owners. Like, here's the onboarding spend for Fun in the Sun 22. And here's the onboarding spend that we incurred. We bought all this furniture. We spent money on upfront.
I love that. And it is something that you can build a temporary thing, right? Hey, we're going to go ahead and turn this on for this onboarding time. You're going to see everything, just the data and analytics behind that alone is invaluable to be able to have that there. It's pretty phenomenal. I like that idea a lot.
I think a lot more for us around being able to just pull down report. We've not built a ton of reporting today. That's an area that we wanted to get as much information as we can to understand like what we have. And then another piece of product that we're pushing out is going to be just like more insights. So we can drill down on property level spend really granularly. There's a lot of folks who are investing in properties, signed up some companies that are much bigger and they have like really interesting businesses where they don't need the same type of like owner level reporting, but they have LPs and they have like investors. And so there's a different level of reporting that's required therein. And so what we're thinking through now in the midst of beta testing is how can we get really granular reports that help them better process their monthly statements that they ended up pulling back to LPs. So there's another piece of the business. There's some things around, and there's so much that I could delve into, but there's a lot around the product that we see. We built V1, and the hard part is like building the bank, building the infrastructure. Now there's just like improvements to the existing stacks. We're excited. Actually, one more thing I can mention, we're starting to partner with accountants to help potentially like folks basically close their books. There's a subset of folks who maybe aren't big enough for the big PMS systems where they're doing full trust accounting, but need to make sure they're accurately accounting for every transaction. They're closing their books. They're following the right rules in their state or in their market. So we're in a very early trial with a few folks to basically do this and then figure out how to productize some of that stuff to help the bookkeepers. It'll save them money because we can basically pass off a lot of the time savings, and the bookkeepers and tax folks who we're talking to are like, this, we totally get it. And then on the other side, it saves the owners or the manager side because they don't have to pay some crazy cost for both. It's like a much more simple.
Right. So you can come in, use it as a product or as a product and service.
Yeah.
That's what you're looking at.
That's right. And it's just still trying to make sure you're not biting off more than you can chew. But so far, so good, I think.
Love it. Hey, Jonathan, thanks so much for joining us, man. We've had a blast and learned a ton. And I know we're going to keep seeing TopKey. We're going to see you partnering with more PMSs, seeing you pop up with who you guys use. Oh, we're using Top. Oh, no shit. It's going to be exciting to see your growth. And we're excited to go ahead and watch you scale and what's next for you.
Thank you, guys. I really appreciate it. And it's awesome to meet like-minded folks on the journey, right? Yeah, would love to next time. I'm guessing we're all going to be in some conference soon together. I don't know if you guys are going to be in Orlando, but I think there's a couple down there.
Yeah. Yep. I'll be at Favor. We'll be at
Yes.
Irma International in Orlando. So I'll be at both of those. Yep.
Awesome. I'll see you guys there at both. All right. Thank you, guys.